Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty as well as the different asset classes. Now first of all, a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing in trading. Now first of all, let us take a brief of what we have discussed in our last video. In our last video, we have a view that the undertone of the market is bullish. Markets are trading near the lifetime high, and any dips should be used as a buying opportunity because the prices were showing strength and there is no signals or there is no indication of deviation from the primary trend. So any dips was a buying opportunity, which was the view of the last week, and market open on a flat note. It cooled off for 1 or 2 days, and then from lower levels we have seen a sharp bounce back, and Nifty managed, not only Nifty but all the indices managed to close on a positive note on weekly basis. So friends, now let us go to the Nifty daily charts. We'll try to figure out what is the chart setup and what could be the trend for the next week. We have been discussing Nifty for making a expanding triangle, and which has been panning out since last couple of uh, months, and definitely the setup is becoming more stronger and stronger day by day, week on week, and month on month basis. So definitely the charts seems to be positive. This is the daily charts. You can see horizontal line where Nifty has managed to close near its lifetime high, which is a good sign at this juncture. Let us see the RSI. RSI is also placed with positive signals in the comfortable zone. So price and indicators both are positive. Now let us go to the Nifty weekly charts. Now here also you can clearly see Nifty weekly charts. Nifty has formed a hammer kind of a pattern, which is also a bullish signal at this juncture. So most probably overall the setup is quite positive, and sooner rather than later, Nifty has potential to test the upward resistance trend line of this expanding triangle in the next couple of months. So definitely the trend seems to be positive at this juncture, and at least for the next week also. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 22,350. Below that, the second support is placed at 22,224, and third support is placed at 22,047. Whereas on the upside, the first resistance is placed at 22,666. Above that, the second resistance is placed at 22,806, and third resistance is placed at 22,947. So these are the crucial supports and resistance level in Nifty for the next week. Again, I would like to uh, reinstate that any dips should be used as a buying opportunity, should be the strategy for the next week. And again, I would like to put more importance to the first half an hour to 45 minutes range breakout strategy for intraday trading on the indices. Traders should mark the highs and lows of first half an hour to 45 minutes range, and then trade accordingly in the direction of the breakout. As I said, the primary trend is positive, so at this juncture, any dips should be used as a buying opportunity. Now, friends, let us discuss the derivative data of Nifty calls. You will see on the screen, in Nifty calls, the action was seen in 22,600 calls, 22,700 calls, 22,800, and 22,900 calls, and up to certain level, 23,000 calls also. Now, here you can see there has been a drop in the option premium, which means the smart money is might be into writing the out of the money calls. The implied volatility is low, so definitely looking at the implied volatility, the data is positive. There has been a rise in the open interest, rise in the volumes. There is no shedding at all. The only thing is there has been a drop in the option premium. That means some traders might be looking out for some cool off on maybe 1 or 2 days in the next week. But overall data seems to be positive. But as of now, uh, looking at to the volume and open interest concentration, 22,600 could be the immediate resistance. Once Nifty closes above those levels, then it has potential to test the level of 22,900 in the coming trading sessions. So definitely the data is positive. The most important thing is the low implied volatility IVs, which is a positive sign at this juncture. Now, friends, let us discuss the Nifty put data. In Nifty put, the action was seen in 22,400 puts, 22,300, 22,200, and 22,100 puts. Now, here you can see there is a slight drop in the option premium. There has been a rise in the open interest, rise in the volume. The implied volatility is also in a comfortable zone. It is between 12.15 to 12.82. So, looking at the volume and open interest concentration, 22,400 could act as an immediate support. If Nifty breaks and closes below those levels, then there are chances that Nifty might slip down to the levels of 22,300 mark. But I feel that 22,300 could be the best or best possible area where one should go long if there is a cool off in the next week. So overall, the data and charts seems to be positive, and the setup is also quite positive. The indicators are also positive. So the view is buy on dips. Any cool off should be used to buy at the lower levels. So now, friends, let us discuss the Bank Nifty daily charts. Bank Nifty has clearly given a breakout of this particular falling channel. It is comfortably above those channel. Friday was an inside day candle. So for next week, the highs of Friday and the highs of Thursdays, which is to be precise 48,161, should be the breakout point. So until and unless Bank Nifty doesn't break 48,161 decisively, one should wait for some cool off. And if there is a cool off, that should be used as a buying opportunity. On the downside, 47,519 is the crucial support. I think that should be the area where buying might emerge at the lower levels. This is the daily charts. So it is quite positive. Let me stretch the RSI. RSI is also positive. It is in the comfortable zone. So no sign of a weakness at this juncture, but a cool off cannot be ruled out. So now let me uh, go to the Bank Nifty weekly charts. Now this is the weekly charts. Now here on the weekly chart also you can clearly see it is a bullish candle. No sign of weakness yet at this juncture, but the Friday's candle was an inside day, slightly bearish. So some cool off cannot be ruled off from these levels. Now, friends, let us discuss the supports and resistance level in the Bank Nifty. First support in the Bank Nifty is placed around 47,519. Below that, the second support is placed at 47,196. And third support is placed around 46,786. On the upside, the first resistance is placed around 48,161. Second resistance in Bank Nifty is around 48,381. And third resistance in Bank Nifty is around 48,636. These are the crucial supports and resistance level in Bank Nifty for the next week. Looking at the charts, we feel that any dips should be used as a buying opportunity, should be the strategy for next week. So now, friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 48,000 calls, 48,500 calls, and 49,000 calls. Now here you can see there was a significant drop in the option premiums because on Friday, as I said, the Bank Nifty trading range was an inside day trading range with slightly negative candle. Because of that, smart money might have been into writing the out of the money calls or at the money calls also. Now there has been a rise in the open interest, rise in the volumes. Implied volatility is between 11.34 and 13.17. So definitely on immediate basis, 48,000 could act as an immediate resistance because there is a strong concentration of volume and open interest. If that is taken out decisively and Bank Nifty closes above 48,000, till then Bank Nifty might remain under pressure or some sort of some cool off cannot be ruled out. And once Bank Nifty closes above those levels, which is 48,000 mark, which is the psychological mark also, then there are chances that Bank Nifty might head towards its lifetime high, which is around 48,650 odd mark. and there are chances that Bank Nifty might test 49,000 also in the coming trading sessions. So definitely at these levels, we might see some sort of cool off, and that cannot be ruled out next week. But that should be used as a buying opportunity. So now let us discuss the Bank Nifty put data, where we will try to identify where could be the strong support area from where traders can go long. In Bank Nifty puts, the action was seen in 47,500 puts, 47,000 puts, and 46,500 puts. Now here you can see there was a rise in the open interest, rise in the volumes. Implied volatility is slightly higher. It is between 17.46 and 17.64. Now here you can clearly see there are three strike prices: 47,700, 47,600, and 47,500, where the volume and uh, the open interest concentration is good. So I feel that 47,500 to 47,400 could act as a very strong support area, and between those levels, 47,400 to 47,500, should be used to buy if there is a cool off, and if Bank Nifty takes supports, and if take a pause around those levels. So this is uh, the ideal level or range between 47,500 to 47,400, where one should try to build long position if there is a cool off next week. So looking at this particular data, we feel that a cool off cannot be ruled out till 47,400 on the downside, and that should be used as a buying opportunity. So overall, the charts and derivative data are suggesting that the primary trend is positive, but a cool off cannot be ruled out, but that should be used as a buying opportunity. So friends, now let us come to the final segment of our show, which is positional call. I've identified one stock has been making a downward falling wedge since, you can say, the start of 2023. The stock has been severely corrected from its lifetime high of 864. It has taken support around 452. Almost stock has corrected more than 45% in the last 1 year. Now, at this juncture, you can clearly see the stock has somewhat indicated a breakout from a falling channel. You can clearly see the RSI is also showing positive indication with positive signals from the comfortable zone. You can clearly see the follow-up selling has taken a pause. You can see the volume indications. Volume are also rising. That means some sort of accumulation is being seen at this juncture. So a technical pullback or a reversal cannot be ruled out from these levels. So swing traders, short-term investors, long-term investors, positional traders can accumulate the stock in the UPL in the range of 482 and on dips to 474 for an upside target of 525 in short to medium term. Short to medium term means an investment horizon of next 3 to 4 months. So definitely the stock is showing some sort of revival at this juncture. Trend reversal cannot be ruled out. You can clearly see the stock has already corrected more than 45% in the last 1 year. It has almost, the prices have eroded almost 45% from its lifetime high. It is showing some signs of reversal at this juncture. Currently, the stock is quoting around 482. So I would again like to mention the levels. Investors can accumulate the stock in the range of investors can accumulate the UPL in the range of 482 and on corrections to 474 for an upside target of 525 in short to medium term. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.